What's up, guys? Today's video is one I'm really excited about, and it's how to use the ORB method, but also using moving averages, EMAs in particular, to stay in plays longer and add more conviction to our plays. So if you don't know, the 15-minute ORB is the method that I use. It's just the high and the low of the first 15-minute candle. These levels here in blue are levels that I had used hourly to kind of map out, and be ready for in terms of big support and resistance levels. So first thing I'm going to do, using SPY here, the high and low of this first candle, 437.23, and then the low right here at 433.84. So now that I have these levels established, I'll flip over to the 5-minute chart, and these become my call and my put triggers, right? But what I'm going to do is I like to use the ORB levels for entry as well as price action, and then the EMAs just help me with conviction and knowing when to scale out of plays. So in this case, we get a close below at 10:15. Cool. This would be my entry right here on this retest, or I can wait until 10:35, get a retest as well. Gonna flip on the EMAs now, and as you see, one thing with EMAs that I like in particular is it helps to identify flow, and I like to have the pre-market hours on, as the EMAs do change based off of extended time. Noted here, we get that close below, long upper wick. We can't turn previous support into resistance, like that a lot. Nice entry spot. In terms of holding plays longer, I still scale in thirds. First third, 20%, second third be the next big resistance, and then that third runner type, which is the last third of my play, I like to hold and wait for a close above the 8 EMA, and that just helps me with a possible flip in trend. As we see here, big trend day the last couple days on SPY. We close above the 8 EMA once. Never close above the 20 until right 30 minutes before close. Cannot hold that on a retest, fall back down. So if I get my entry here on this denial of our ORB low, my next target, 433, definitely going to keep that. Scale into momentum here would also be my second scale on this candle here, as we are at a big level determined using the hourly 432.2. Perfect. My runners would be stopped out here on the closure back above our 8 EMA, indicating a possible flip of trend. But then I can use that 20 EMA again later in the day to enter into puts in this case, as it helps me to identify trend, and also not going against the trend. I personally made the mistake of trying to fight trend on a hammer candle actually right here, and turns out I lost money because I fought against trend. EMAs help me to identify and visualize that trend, as we see later in the day. So I'm stopped out here, right? These next couple candles all testing, and then we get a close below 8 EMA here. Nice spot. We're back below 433 support. Another spot where we can enter into puts, get some nice sell-offs, get my 20% right in here. Next target, 430.7, get that down here, sell into momentum. Now I have runners. Runners would have been stopped out right about in these candles where we do reclaim the 8 EMA. Now I can look again to enter back into puts, get a long upper wick, can't hold that support, and we're getting denied by our 20 EMA. In this case, I like to keep my stops a little bit tighter just because we could flip, right? But take profit fast. 2 candles later, flip back below, down below the 8 EMA again, get some consolidation, retest 429.8, and we can also trade around a centralized position or a core position if our runners don't get stopped out, which is definitely a tool that's nice to have. Another thing to note, the longer or the higher time frame EMA, in this case the 20 above our 8 EMA, would be a bearish trend. If the 8 EMA were to be above the 20, that would be a bullish trend. We also can use VWAP in this case. I love to use VWAP. Once we start to separate ourselves in terms of EMAs from our VWAP, that is when the bigger moves tend to occur. So that's something to note. Notice how, we don't really get any moves until we start to get this separation. Both of our EMAs are below VWAP, indicating a strong bearish trend. Kind of the theme of the last couple days, very bearish, pretty ugly weekly candles that started about 2 weeks back off of an inverted hammer or a shooting star at the top of our resistance zone. This can work on any ticker, right? In this case, I'll use NEO here. Let's go to the 15-minute. So I already had some predetermined levels on NEO as well. It gapped up, so in my mind, that's a pretty significant indication that this could be a very good ticker. In this case, 9:30 candle, my high 1773, and my low is 1720. So I have call and put triggers now established. Cool. In this case, NEO actually broke through our orb call trigger relatively early, right? So 1773, we get test here, we get a close above on this candle, next candle retest, perfect candle entry, very quick 10-minute scalp opportunity up towards our zones that we had already established. Now we start to fall back down, and we're waiting on a retest and some closes below our 1773 original orb high in order to play puts on a failed call trigger. We get that in here, but notice how, price is starting to chop, and all these EMAs are tangled up in our VWAP. We finally get a close below here, but our retest, love to wait on the retest. It helps me to avoid fake outs. Our next retest closes back above 1773. So in that case, I'm going to wait again. In this case, this is definitely a bearish trend. So it'd be hard to try and go against trend here, but it could have been possible, would have been stopped out in the next couple of candles. And then we get our close back below 1773 orb, below all of our EMAs, and below VWAP. Next candle, we close below EMAs again, get a bearish flip. The 8 goes over the 20, and we can ride the trend down. These two yellow lines here, 1755 and 1742, were just key intraday support. So these were levels in which I was watching. In this particular case, my entry would have definitely been here. We have an inside bar break to the low side as well. Back below our orb high or orb call trigger, and we're below VWAP, 8 EMA, and 20 EMA. So this helps me with that conviction piece. This is where I can add. And I'm going to use a levels-based stop when playing the orb. So if I get a close back above 1773 on the 5-minute chart, that's where I would stop out. I like to use it a lot better, and it works better with liquid names that have cheaper premiums. NEO, very good example here. SPY and Qs, it can be a little bit harder because those contracts do move a lot faster. So that's one thing to note. I wouldn't recommend risking more than you're willing to lose, 20-15%, if that's built into your rules. Set that hard stop there. But these EMAs, I really like them a lot when it comes to holding our plays longer and also identifying trends. In this case, if we enter there, we don't have anything to worry about until this candle here. It's also at that 1742 level, and we have consolidation. Close back above it. Next, test the 20 EMA. Could have played it down here again to the bottom of our zone, 1720, perfect. And then it does bounce back up towards the 20, but never closes back above the 20 until about 50 minutes before close. So using those EMAs really helps with conviction. And I don't like to use them when it comes to entering into a play. I like to enter off of price action and candle type. Long upper wicks help me with the puts, closing back below our levels, very important. And they also show us the trend. The higher or longer term above the lower is definitely bearish. The orb strategy is very, very useful. And the key there is waiting on a 5-minute close below our levels. And I love waiting on a retest. It helps avoid those fake outs even more. But when we add in these EMAs, the thing to note is it can be a lot of cluster, right? There's a lot of different lines on here. There's a lot of moving pieces. But I like to turn them off before I enter into the play just because I want to take my plays based off price action. And the EMAs can help me to identify the trend. And then intraday, I like to use them touches off of the 20 to add, as well as patterns throughout the day. It's a very, very simple strategy, but it can be very it can be very productive. And the key is just, that patience piece, waiting on the 5-minute close, and then setting a stop, having risk management. If you can do that, replicate the strategy, the odds are, you're going to be pretty successful. It's not a 100% win rate, of course, but having a stop and using that levels-based stop has been very, very helpful. I think it's very, very easy and also replicable. I can use this in a bear market, in a bull market. Simple, gives me a call and put trigger. It takes a lot of the stresses out.